Hello there. I'd love to thank you for joining me. It's Lois Talks, and I would love to welcome you to this free video lesson. Um, Before I go on, allow me to thank my mentors, because I wouldn't have been here without these people. I'd love to thank Robert Kiyosaki, who wrote the book Rich Dad Poor Dad. I'd love to thank Timothy Sykes, who wrote the foreword to the book The Penny Stock Guide. I'd love to thank Matthew Crater, who wrote the book Rocket Stocks. Also, I would love to thank H. Potter, who created this indicator here, the EMA crossover. You can find H. Potter on TradingView. He created this indicator here. And you can get Rich Dad Poor Dad from Amazon. You can also get Rocket Stocks from Amazon. Rich Dad Poor Dad by Robert Kiyosaki on Amazon. Rocket Stocks by Matthew Crater on Amazon. You can also get the Penny Stock Guide with the foreword written by Timothy Sykes on Amazon. And you can find H. Potter right here on TradingView. Also, I'd love to thank uh, TradingView for this awesome software which I have been using now for approximately 4 years. So thank you, TradingView. Now, let me get into a story. I think last week, yesterday, I was in a coaching call, a marketing coaching call. I signed up for a marketing coaching call so that I could sell stock trading education to you, so that I could learn how to sell it and make money from it. And one of my mentors on this coaching call told me that when you are trying to sell something to someone, you have to be of service to them, and you have to show them a strategy that can give them instant results. And this is the strategy. This strategy will give you instant results. So I don't know which broker you're using, but and I'm sorry, I should have posted this video before market open, but sadly we had no electricity where I am right now. So my laptop didn't have any battery power, but I should have posted this before the market open, and you would have entered the trade. I planned to post this today before market open, so you would have entered the trade there, and you would have been up. I think by like 5-6%, depending on which broker you're using. So I specifically chose this stock. Excuse me. I found like two of them, and this is one of the stocks that I found. I found like two, there were like two stocks that I found, and I searched hard for this one because I really wanted to show you the strategy, because the strategy is very simple. If the price is above the 50-day moving average, this one here represented by this red line, and the 200-day moving average represented by this blue line here, and if it hits a new high, so you can see this is a new high, then then it's an uptrend, then you can buy. And as you can see, the price of the bars have changed from red to green, to show you that it is in an uptrend. And I am so sorry, I should have posted this earlier on. So this is just a proof to you that the strategy actually works. Now the question obviously is how did we how did I find this? Okay. Well, it was very simple. Let's see if I can find an online tool to show you the mindset. So basically, what you need to understand is what what you need to understand about capitalism is that it is called a bubble economy. All right. Now, I'm sure if you've listened to a lot of, excuse me, I'm having a cup of tea. I'm sure if you've listened to a lot of what can I say? If you've listened to a lot of if you've listened to a lot of financial news, you hear something called the bubble economy. So it's very very simple. So I want you to think of it like this. Okay, this is the economy. Okay, so all right. So this right here is called the market cap. Okay, market cap. Okay, I don't know if I can draw it. And then this right here is called the float. So if you watch Robert Kiyosaki on YouTube, okay, I don't know if I've drawn that properly, but yeah, if you watch Robert Kiyosaki on YouTube a lot, you will notice that he has some sort of like a balloon. I think like some he has a sort of like a balloon there, right? So basically, that's the market cap, and this is the float. And basically, this is how capitalism works. All right. So this represents the total number of shares, okay, that a company has, and then this it represents the number of shares that they have registered to the number of shares that they've registered to sell on the stock market. And this is how capitalism is. It's very simple. So what Warren Buffett does is he invests in companies that have a ratio, a good market cap ratio. Okay, now I could go into more detail, and that's why in the future I plan to sell a course that goes into detail. Right now, I do not have the funds to deliver the course to you. That's why I would encourage you to follow me and rocket boost this video so that when the day comes when I am ready to launch the course, I could go deeper into this topic and show you exactly how to find stocks like this. You see, so basically, this stock has a high market cap and a small float, and that's why it has a good demand. That's why. And also another thing I want you to note is Warren Buffett. He buys companies that are like this because they offer dividends. So when you are buying a stock, you have to buy a stock that has a good management team. So what happened, for example, with SVB Bank? Okay, SVB, SVB Bank, SVB. What's the name of that guy? So what happened with what happened basically with okay, what happened with the SVB, the crash of that crypto company is I don't know, can I use another shape? Okay, let's see what we have here. Okay, here we go. All right. So what happened with SVB Bank was the opposite. So with SVB Bank, the crypto bank, it was actually the opposite. Okay. Instead of what is that? What is that? All right. I paused the video for a little bit there. So what happened with SVB Bank was it was actually the opposite. Okay. Instead, this became the market cap. Okay. I don't know. Can you put words here? Let's see if we can put text. Okay, there we go. Sorry guys. This is the first time I'm using this tool. Okay. So this became the market cap. Okay. That's what happened with SVB. So that this became the market cap, and then this what is that? Okay, there we go. And then this became the float. So it was opposite, and that's why the market crashed. You see. So once the, this is me trying to make you understand why that strategy works. And if you rewind the video and you remember that the diagram I showed you before, that's the ideal situation when you want to buy a stock using this strategy. So again, one day I will go deep into it, and I will publish probably a link to a course in one of my videos. But for now, I just want you to understand why this strategy is so powerful. And if you've noticed, while we were even talking, look, the price has been going up. Look at that. So you really need to understand this strategy. It is very powerful. I don't know if you can buy the stock after this, but anyway, I just want to thank you for watching, and please do not buy what I tell you to buy. That's my disclaimer. Do not buy what I tell you to buy. Do not sell what I tell you to sell. Do your own research before you buy or sell anything. I'd love to thank you so much for watching. Feel free to rewatch this video to learn more about trading. I want you to take care. Bye now.